Let's talk about a share repurchase program now. The company's name is Eqstra, and there was a SENS announcement today. I'll read it to you, or the first bit of it anyway. It says Eqstra Holdings hereby announces that during the period 30th of April to the 6th of May of this year, the company repurchased 8 million ordinary shares, and that's part of a much bigger program, because the general authority given in November 2011 to 17.3 million ordinary shares and a maximum of 21 ordinary shares can be repurchased in terms of the general authority obtained from shareholders. On the line now is Walter Hill, who is the CEO of Eqstra. He's on the telephone. Walter, you say that you see value in your current share price, trading at a discount to the company's NAV, which is great and everything, but on the other hand, some people say to me that buying back shares is the lowest common denominator when a company has a bit of cash around.
I think, Lindsay, no, it's a good investment. The company is currently not only trading below NAV, it is also, the company has got capacity for additional gearing, and we do have spare cash around. There are currently not any acquisition initiatives on the table, and I think it's appropriate that we buy back our own shares. They're trading at a price earnings of 7, and we believe that is exceptionally low.
Yeah, it is exceptionally low. And again, I think what people have been saying to me about the propensity of people to buy back their own shares is that they've exhausted all other means of deploying capital and enhancing shareholder value. Of course, buying back shares means that the share pool is reduced, so therefore earnings per share goes up. Have you been on the acquisition trail and you've said to yourself, actually, there's no acquisitions that we want, number one, and number two, if there are acquisitions that we want, they're too expensive?
I think both. The acquisitions that we've looked at are probably in certain sectors are trading at far higher PEs and not delivering the earnings that we can get out of our own share. So I think we've taken the view that our own share is the best acquisition that's available right now. And yes, it does add that reduces the share in circulation. And we're quite happy that it's the best beneficial acquisition to do.
What about dividend? The dividend story is another one. Are there tax implications there? Is that why you've rejected that?
I think, yes, we will. Eqstra has announced a 3 times dividend cover policy, and we will maintain that. So it is more beneficial, I think, from the tax implication point of view. There's a balance between a solid dividend policy and then a share buyback program.
It's interesting that you say that you've had a look at a few other acquisition possibilities, but their PEs are higher than yours, so therefore you've rejected them. Does that mean that you've sort of stopped looking, or do you keep on being active in the market, both in South Africa and beyond our borders?
We are definitely active both in South Africa, in the rest of Africa, sub-Saharan Africa, and in the UK, and we're also active looking for acquisition opportunities in Europe.
Let's broaden this discussion now, if we can, Walter, and have a look at the state of the market and the state of your industry. A lot has been made of what is happening in South Africa and what is happening overseas, and how there's decoupling between various world economies. You operate in different jurisdictions. What is your take on what's happening in South Africa, Europe, and also other areas?
I think South Africa, we're seeing a decline in certain sectors, I think particularly commodities and retail. We're finding pressures on those customers. Decision making is taking longer, but the business is still very active. And one questions, if the economy is slowing down, because there's a lot of investment taking place, and we see a lot of underlying activity still happening, notwithstanding a slowdown on retail and commodities. The construction industry has not gained momentum yet. We are not seeing the big infrastructure investments taking place. We're very happy that we've exited the construction mining equipment divisions. That was very volatile and cyclical, and we've exited that cyclical business. So we are not having any major impact of a slowdown in the economy. I think our UK business, what we're seeing in the UK, particularly the economic activity is flat, and we are relatively small in the market there, so we are having good growth in the UK. We distribute the Caterpillar brand of fork trucks in the UK, and it's doing very well. Europe is still under a lot of pressure. We're seeing very little real activity in Europe in our type of business.